Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market update. Hope everybody had a great week and a great day trading. So in today's markets, guys, extremely volatile session. Take a look at your indexes here. SPY down 0.6% on the day. QQQ down 1.5% almost. And it's funny because these indexes were actually green on the morning. We had a NFP Jobs report come out in the morning, which was fairly good. However, the markets at about 11 o'clock in the morning started a deep rollover here. SPY coming down almost 1.25% from the top, and QQQ from the top, guys, down pretty much 2.25%. Very volatile session indeed. So we're going to take a look at the jobs report that came out this morning, see if the economy is still healthy. It was definitely not the reason for the drop at all. The drop came well after that jobs report was released. So we're also going to take a look at a few subscriber requests that we've had on the channel over the course of the week. Number one, Che Molina asking, can I review Mercado Libre again? Of course we can. We'll do some technical analysis on that right away. Then we have Rashid once again asking for a second request. We'd love to hear your thoughts on ALGM. So we're going to cover a bit on that stock as well, do a little bit of a 5-minute rundown, fundamentals and technicals, see how the company is positioned for the near-term future. And lastly, Godspeed asks, would love to see a breakdown on PALI and OCGN. Apologies, Godspeed, that I didn't tackle this one when I should have last Friday. So we're going to do them this Friday. Those are two small biotech plays. So we'll see how them and the whole biotech industry is shaping up. We're going to do those subscriber requests right away, pretty much after this intro. In terms of your earnings here, guys, I do want to cover MongoDB, but I'll be covering them pretty much on Monday. Haven't had enough time to do some research into this company. Sufficient enough to have a good understanding of where the company is and where they're going for the near-term future. So we'll do that probably on Monday. For the earnings next week, we do have a relatively small week in terms of large companies reporting. So on Monday, we're going to be tackling Oracle, most likely here. And then later on in the week, there are a few that we potentially can cover, but the main ones come once again on Thursday here. We have Adobe and Dollar General, which we closely want to follow. We also have Ulta Beauty that we may take a look at. But for the large part, guys, the earnings season is mostly wrapped up right now. So before we get into these subscriber requests, let's just do a quick cover of the jobs report that came out this morning. So here is your jobs data. February jobs report. U.S. economy adds 275,000 jobs, and the unemployment rate hits 3.9%. That's the highest it's been in a couple of months. Take a look at your charts right here. I'll try to blow them up for you guys. So here is your jobs data. Here is your total non-farm payrolls add, which is about 275,000 jobs for the month of February. Fairly decent read as a whole, is in line with roughly the averages spanning over the last 2 years. In terms of your unemployment rate, however, we have ticked up to about 3.9%, which only was as high as 3.9 back in all the way January of 2022. So hitting pretty much a 2-year high for the unemployment rate. But is it skyrocketing out of control? No, we're still adding jobs to the economy, and Wednesday's jobs report on the private sector did show largely the same. However, what this does show, guys, is that interest rates are beginning to incrementally affect the jobs market. And that's what Jerome Powell was talking about in Congress on Wednesday and Thursday. They were saying how they had a little bit of a pickle in terms of situation right now, right? So they don't want to bring down rates too quickly that people go out and spend a ton of money and cause inflation to come back, but they also don't want to cut rates too late and ruin an otherwise healthy jobs market and economy. So this report coming out this morning with the jobs market, the jobs market still healthy, unemployment rate ticking up ever so slightly. The jobs market is tight, guys. Supply and demand is still balanced out, but we can't be, the Fed can't be too greedy on that. If they do wait too late, these items will deteriorate significantly. So that's why a lot of the market is expecting them to just start decreasing rates, guys, in terms of the June and July meeting, and do about 3 to 4 rate cuts over the course of the year. And I do think that will be very healthy to keep the economy in line with expectations and to keep the jobs market tight. They have to do it, guys. If they go too far, if they don't cut rates at all this year, these two items right here will deteriorate significantly and will have an impact on the overall economy. And that's definitely not what we want. That's not what the Fed wants either. So they should likely be cutting rates this year about 2, 3, or maybe even 4 times. So that's pretty much it for your jobs report. Now let's get right into our subscriber requests, and we're going to cover it off with Che's request first. So let's start it off with some analysis on Mercado Libre. So if you guys haven't seen my analysis, the fundamental analysis after earnings on Mercado Libre, I'll link link the video in which I did that right down below in the description of the video. But in terms of the technicals, guys, Mercado Libre is actually coming right into exactly where I want it. On the monthly, we were looking out for this beautiful monthly uptrend here to just continue, and we have a nice breakout and now retesting this previous support zone. The previous support zone is this big green box spanning the range of about $1,500 all the way down to about $1,300. My decent buy territory for the stock. The stock is currently trading at a peg of about 0.9, which is an extremely attractive valuation for any growth company. Now, this company is improving margins. They're growing revenue excessively fast here, and EPS excessively fast, and they're growing revenue excessively fast as well, all while improving their net margins. Take a look on a quarterly basis. You can see in prior years, net margins were roughly flat, and in 2022, about 4.5%, 2023, 6.8%, and as of your most recent quarters here, coming into the 9s. Last quarter, they had a few one-line items in terms of taxes that they had to pay, so that ruined their net margins. But if they didn't have those items, margins would have once again been in the 9% range. So everything going great for the company. It is approaching my buy zone quite quickly, and I actually jumped the gun on it. I bought 2 shares today at roughly $1,525. I will add a few more shares if we dip down here, guys, into the 1,400, even 1,300 range. I just think it's a tremendous buy zone for this company. Company should be performing extremely well and outperforming normal markets here in the foreseeable future. So for both a swing trade and for long-term investing, I do think that this one is a very good pick coming up on the price levels that we're getting right now. So hopefully that was insightful for Mercado Libre. I am now in the stock myself, 1525. And like I said, I will continue to add if we do dip lower into this box, potentially with some further market consolidation. Now, in terms of the second request, in terms of Rashid's request right here, let's take a look at ALGM. So ALGM is a company that I've looked into a few times. Essentially what they do, guys, is they manufacture a lot of accessories for, not only EVs, but also industrial applications and also solar panel applications as well. So they manufacture a lot of different little micro inverters, different little chips, different little accessory sets for that whole business. So it's really a picks and shovel company. Now, a few of the headlines here, guys, that we're going to go into in terms of the company. I'll take you through a few of their slides right here, Rashid, right? So if you haven't seen this one yourself personally, highly recommend to go through their investor slide deck that came with their most recent earnings. So here is a bit of what they do. So customers need Allegro to help solve their design challenges. So you can see here that they manufacture a number of accessories, guys, for not only vehicles in terms of inverters, right, in terms of sensors as well, not only for car parts, not only for EV batteries, but also for drivetrain applications and stuff like that, hydraulic accessories as well. So that is pretty much a bit of what the of what the business does. Now, they say we win as cars electrify, as clean energy expands, and as the world automates, since they have applications for all 3 of these sectors: EVs, solar energy, and obviously your industrial automation revolution that's going on right now. Now, in terms of the compound annual growth rate, which is very good, every single one of their lines of business that they're in is growing at a compound annual growth rate of roughly 10%. So that's very good. They're also a nicely diversified company across different territories. So their sales are not only limited to North America or something like that. They're really well-rounded across the world. Most of their largest contracts, guys, are with vehicle manufacturers. So just keep that in mind. That's why I said that they're, the headline here, they are beholden to OEM, EVs, and internal combustion engine demand, plus solar demand, which makes them indirectly rate sensitive. Now, this company themselves are not rate sensitive. They don't have a lot of debt. However, the companies that order supplies from them are all rate sensitive. And you guys know the auto market is not performing quite well right now. It's a bit of a cyclical industry. And because of high interest rates, guys, you have less demand for cars as a whole. More specifically, less demand for EVs. You don't need to look any further than Tesla's most recent couple quarterly earnings to see that. And also the fact that As I was pointing out in an article about a week ago, guys, every single OEM car manufacturer is pulling back production of EVs, which has left this company kind of left behind. And we'll see that when we take a look at their inventory buildup. It's the only red flag with this company, guys. They have a little bit too much of inventory buildup that they haven't been able to get rid of here over the last couple of quarters. So that's the one red flag for the business. In terms of their financial performance, guys, I mean, their margins are fairly decent, not going to lie. Right. So they have about, in the mid 50 range in terms of gross product margin percentage, which is very, very good. 27% operating income margins, which are also very good. The only problem as well, guys, is the fact that the company is not growing for the next couple of years in terms of analyst expectations. Take a look at their estimate for 2023, about $1.29 in EPS. It actually dropped here in 2024, most likely because that they forecasted the demand for EV products will be down, so their business will be affected as well. Bit of a cyclical nature, that's normal. But even in 2025 and 2026, you can see the expectation for growth of earnings is not there, and it just remains the same in terms of the revenue as well. You can see declines forecasted in revenue for the next 4 quarters at least, and even over the next few years, revenue expansion is just not that fantastic before about 2025 when they start growing at about 10% year over year still. So still 2024 for them should be a bit of a transition period just due to the cyclical nature of the people that they provide the orders for, right? So that's just a little quick tidbit on ALGM here. They do have decent market growth as a whole in terms of their targeting automotive production, right? Their growth is well above their target segment of automotive growth. They're targeting between 7 to 10% growth in their accessories, and for their industrial market, about 5 to 10%, which is also above the industry standard here. You can see that they're targeting 58% gross margins. They're very, very close to that. Operating expenses about 26%, which is kind of decent, which gives them an operating margin of about 32% that they're targeting. That's just 58 minus 26. Very, very easy to find their operating margins. And they do have decent free cash flow. Have to give that to them, guys. Nothing wrong with their free cash flow here. Take a look. On a quarterly basis, they do bring in some free cash flow. I mean, the company is not that large to begin with. They only make about $1 billion a year, $6 billion market cap, which is still a significant amount of money. Just take a look here, guys, right? Free cash flow, they're bringing anywhere between $20 and $40 million to the bottom line, which is fairly decent. And they don't have that much in terms of share dilution. So they have a low amount of debt, decent free cash flow, decent gross margins. They're controlling operating expenses all right. I mean, they're not improving them significantly, but they're not getting worse. So they're just okay. Low stock-based compensation. The problem is the revenue and EPS growth is flat for the next 2 years. And I just want to show you guys one of the things that I look at in terms of these smaller growth companies are the insiders buying. So are the executives and the directors of the companies buying these shares? Well, you can see here in the past 2 years, no insider buys for the most part. They've largely been sells. Now, a few of these can just be automatic sells that are, programmed for management and executives. You see that all the time in tech stocks, but just notable to me here, guys, that, usually you want to see insider buys if they truly believe in the vision of the company and in the growth of company. If there's an immediacy, right? If they think that the company is going to grow very quick soon, usually you see insider buys start to pile up 1 or 2 quarters before the company really starts expanding on their growth trajectory. So far, we haven't yet seen that. In terms of their share count, you can see here shares outstanding, right? They don't do a lot of stock-based compensation for employees, which really helps keep their share count low. You can see no real dilution pretty much here over the past 3-4 years at this point. It's been maintained relatively flat since raising that initial capital after their IPO. So the one problem that I do have with this company, guys, let's take a look at their balance sheet, right? So you can see current assets, right? Let's put this at about $225 million. In terms of their debt that they have, long-term debt, all 4 of these combined here, roughly $300 million. So don't really have a problem with that. The problem is here, guys, okay? So take a look at this. They have around $165 million in inventory for the quarter ended December 29, 2023. How much did they have in inventory in March 2023? 151 million. Their inventories are growing, which just goes to show you guys, if they're not able to liquidate inventories, it's a little bit of a problem. It just goes to show the signs that the market they're in is a cyclical market right now. It is slowing down. That's not really their own fault. Nothing wrong with the company itself. Just a little bit of a red flag that they're not able to liquidate inventories. And they even touched upon that in one of their slides I forget which one it is, but they said it right here. Industrial and other sales impacted by continued inventory digestion. So they recognize that it is a problem and it is potentially hurting their ability to grow sales. So just keep that in mind, guys, in terms of your, in terms of Allegro, really not that bad of a company. And just to show you guys their stock-based compensation, let's go down to the cash flow statement right here. Their stock-based compensation, really only $32 million for the 9-month ended period. So let's put it on an annual basis. Let's say like what, like 45 million dollars in compensation, which is not that bad. They make about $1 billion a year, so roughly about 4%, right? Really nothing egregious in terms of that. So decent play in terms of the technicals here, guys. Yes, they are trying for a potential formation of a weekly uptrend sitting on the moving averages right here. So you could be expecting a little bit of a breakout to the upside. But in terms of the valuation, guys, considering the fact that the revenue and EPS will be flat over the next couple of years, you know, it's very, very tough to give the company a 2x and put them at 2x the multiple without any growth for the foreseeable future. This stock is entirely going to move with interest rates and with other auto manufacturers, in my opinion, just due to the cyclical nature of the business. So can they potentially have a chance at recovering share price? Yes, but will it be because the company is doing something specific? No, it'll just be because the industry as a whole is recovering. So when this stock does this, expect other solar plays and EV plays to also start doing this. So this is just lumped up with that segment as a whole. And as a last thing that I want to leave you, Rashid, if you like this one particularly, I would recommend looking into this company, NXT, which, I mean, they operate in the same general business, but their focus is slightly different. But this is one of the best companies here in terms of some accessory applications for clean energy development here. This company, what they do specifically, they have amazing financials, number one, but what they do specifically is they manufacture the software for solar panels. When solar panels rotate to capture the sun, depending on what angle the sun is during the day, they manufacture the software that actually tracks the sun and everything like that. So they really have no skin in the game in terms of high levels of inventory or inventory management and whatnot. So their margins are relatively good at this early stage in their company. You can see here the margins, although they are still quite, tiny, they are expanding. The revenue is expanding nicely, EPS expanding nicely. Just nice to see a company, starting off already profitable and growing very well. This was actually pointed out to me by Michael, one of our subscribers on the channel, and it's the Zacks Investment Research top pick for 2024 as a whole. So Rashid and other people, if you guys like these types of plays, definitely look into NXT. Not financial advice, of course, right? And then lastly, guys, we're going to cover one more. So Godspeed asks, would love to see a breakdown on PALI and OCGN. Okay, so these guys are biotech plays. Now, as you can see, these companies usually get crushed pretty hard, not because they're bad companies or whatnot. It's just the industry that they operate in, guys. Biotech stocks are excessively hard to predict, largely because most of their revenue stream is dependent on patent approvals by the FDA. Whenever they research and implement new drugs, they have to go through a very lengthy trial period, after which they either get approved by the FDA or get denied. And the entire livelihood of the stock relies on those FDA approvals. Other than that, they usually tend to just trend towards zero, because without those approvals, guys, you can see they don't make any money. So PALI, you can see this company right here, right? Market cap is only about $3.5 million. I think they only have about 13 employees to begin with. But you can see they just really hemorrhage money. And the only way these companies are able to raise money, because they don't make any revenue, they can't really issue bonds, can they? So they can't go to the capital markets to raise money in the form of actual debt like that. So what do they have to do? They have to sell more shares on the open market. And that's when you get this massive share dilution coming into the market, which really crushes the share price. This is why you see, after so many dilutive events and potential stock splits, right? This stock never IPO'd at $305,000 a share, right? They've just been really diluted and split the stock, and then it continues moving to the downside. And every now and then you get little short squeezes like this. They're all the same, guys, right? So it's not my place to comment on whether or not you guys want to trade these things. I'm just going to give you the analysis that I would do if I would be looking to trade these things. Number one, If you guys want to know who is the absolute GOAT of trading biotech stocks, it's Martin Shkreli. Yes, the guy who went to prison because of his, let's just call them shady pharmaceutical practices in which, you know, he would overcharge for certain drugs, namely diabetes drugs and stuff like that, right? So I'm not going to comment on him as a person, but as a trader and investor in the biopharma and pharma industry as a whole, he has some true gems on his YouTube channel if you are looking to play these more aggressively. However, it does require pretty in-depth knowledge of the industry as a whole and competing products. Let's say this stock, I don't know what specifically they do in terms of their drug patents, but let's say it's a diabetes drug that they're going for, right? You have to know what other competitors in terms of drugs are on the current market, what they're worth, and that's how you can forecast revenue growth and stuff like that. So this company, guys, right, PALI, a bit tough for me, guys, right? On the hourly, you can see there's not that much volume during the day as a whole. So this one, it's very tough to make any technical analysis on right now. We're basically waiting. Since it doesn't have fundamentals, we can't really make any predictions to the upside. You basically just have to wait for short squeezes if you're buying something like this and try to buy the momentum on the smaller time frames. At that point, guys, you'd be looking out, let's just take this 5-minute chart, for example, right? You'd be looking for a stock to make a move like this. Whenever you see that first little ramp up and die down, you can try and make a play when you get the 5-minute trend change back to the bulls. You can try to scalp this breakout period, but unless you're going in with, you know, kind of heavy size, keep in mind that most traders that do this, guys, are trading tens of thousands of shares and they're only scalping it, you know, for some pennies at a time. Most people are not waiting for the entire short squeeze. So they're very tough stocks to play as a whole, guys. Now, moving into the second one, OCGN. OCGN is actually one of them that hits the news every now and then because they've been, you know, pending patent approvals now for the past couple of years at this point, right? So OCGN, pretty much same thing, right? Every now and then you're going to get these little short squeeze events, which just get sold off. And now we have some, better momentum in the stock, but excessively tough to trade once again here, guys, because they just don't have any revenue whatsoever. So you're basically playing entirely off momentum. But the problem with that, guys, is you may end up with a 5-minute uptrend right here. But then for some reason, guys, some massive short seller can come in up here and just absolutely crush the price on his own. So that's what you have to look out for on these. I don't really like playing these individually. If I am going to play biotech stocks, guys, I am either going to be playing XBI. So XBI tracks the healthcare ETF XLV a bit better. And you can see XBI has actually been on a nice run here. It's the exact same run as XLV has been on, but usually you do get some outsized returns on XBI. For example, XBI off the lows here, they're up about 58% off of that rally, right? But XLV Healthcare on its own, from the lows to the highs, is only up about 18%. Now, if you want to be really degenerate with it, you can play LABU, which is the 3 times leveraged biotech ETF. And you can see this one, since it's the healthcare rally started, that one's up pretty much 200% since the bottom of that rally, right? So those are usually the ones that I'm looking to play if I do want to take some risk on biotech as an industry as a whole. Personally, I just don't know enough about the sector to make individual plays. That's why I usually play the ETFs when I'm looking to do that. But a few little things that you do want to look out for here, guys, especially for companies like OCGM, is you have to understand what is the investment thesis. So one of the things that I look at, guys, is, right, I take a look at who are the analysts that are covering this stock. Now, if you can see right down here, you can see forecasts on this, right? So we have 3 analysts currently covering the stock with price targets between $4 to $8. Now, with a company that doesn't make any money, we obviously want to understand what is the thesis behind their investment decisions. So we have 3 analysts right here. So what I'll usually do is I'll just copy their brokerage firm, copy the name of the analyst, put that into Google, and then try and find their investment thesis as to why they have such high price targets on a stock. Then if I see some merit into the thesis, I may have it may give me the green light to make a little bit of a tiny investment in it. But if the investment thesis is just not clear and it's all theoretical, no concrete evidence of what they're actually doing to manifest, well, then I'll probably just stick away. And also the one thing that I do want to check as well is the insider activity. So many of these stocks that don't have any revenue, what I like to do is check the insider activity, because it just goes to show you guys the same thing we were talking about before when we were looking at pretty much Allegro, right? Allegro, the company that we reviewed for Rashid. So what we're looking for here, guys, is pretty much, are the insiders buying because they expect the patent approval to be coming in the next 3 to 6 months? You can see here, guys, in terms of the number of open market buys in the last 3 and 12 months, no, but there have been a lot more sells, right? So that is a little bit of a red flag. We have one director buying, about 200,000 shares right here at about 50 cents, about $100,000, right? Not that much. It is still decent, but still not that much. And then we just have a bunch of dispositions, which are otherwise known as sales. And then you also have some automatic sells here, but just still what we want to focus on, guys, is the lack of buys. You want to see directors and executives of the company, if they know they have a pretty good chance at patent approval, it's not insider trading. If you tell the SEC that you're buying, which is they give disclosure for the trade, then they buy the shares. It's entirely legal to do this. Right? Just no insider buys. So this one, unfortunately for me, would just be a no, just because we don't have many insider buys here. We don't have many insider buys. And just because the company currently is not generating any revenue, I would then go into the analysts and see what their investment thesis is. But like I said, guys, I tend to stay away from these plays individually and usually more go with something like the index as a whole, or just instead play something. This is for me personally. I just like to find more solid trades. If I'm looking to make a quick, 40, 50%, 2x percent, 100%, a 2x on a trade, I'll just look for a very, very solid stock that's hitting historical RSI levels, such as the Apple dip down here, and try to make a little bit of a long call play here, 30, 45 days out, roughly around the share price, and just go and try to play for a quick bounce. For the same gains that you could potentially get in biotech, you'll be doing it with options on a much more solid company. So that is just some quick analysis on what I thought about those plays specifically. So with all that being said, guys, hope you enjoyed that. If ever you have a subscriber request that you would like for me to do on the channel, usually I have time to do them on Fridays since we don't have any earnings. So always leave your comments down below and I can probably do about 2 or 3 of them every single Friday. It'll be pretty much first come, first serve at this point, guys, in case I get bombarded by 10, 20, 30 people, right? So whoever's pretty much the top 3 first comments will get their requests featured on the video. If you want me to do it in the video, if not, if you want me to answer in the comments, I'll just answer in the comments. Just leave me a note as to what you would prefer. So all that being said, guys, let's jump into our technical analysis on our indexes right away, shall we? So before we get started on SPY, guys, and QQQ, I just want to point out one specific thing, all right? So you notice the QQQ had a major drop today. Let's take a look at the heat map here. You'll see that semiconductors were largely responsible for this. And then we had some drops by Costco, significant drop. Some of your big tech was down as well, but the bottom half of the market was fairly healthy. So fairly mixed market as a whole, right? However, we need to understand why the QQQ dropped as much as it did. Now, let's take a look at the top holdings for QQQ, guys, and you will quickly understand why this transpired. Now, your top 10 holdings in QQQ, right? Number 3 is NVIDIA, 6.48%. Number 6 is Broadcom, and here you go. Number 7 is Costco, right? Now, let's take a look at the ones that dropped the most over the course of the day. Well, NVIDIA, down 5.5%. Broadcom, which is another one of your top 10 QQQ holdings, down 7%. And Costco, another one of your top 10 holdings, down about 7.5%. Now, there's a couple things that are in common with NVIDIA and Costco, and I want to show you that right now. Broadcom just basically had earnings yesterday, so nothing special there. However, take a look at NVIDIA, right? Extremely overbought conditions, and off of no news, we had a very big sell, talking about almost 10% top to bottom on the stock today. So very, very heavy selling pressure coming in at the top of the market right here. We've also been concerned, guys, with a little bit of seasonality, right? I keep bringing up this chart. Your March seasonality may just be time for traders to take money off of the best performing bets, just as I've told you guys to potentially be looking into. The other one that dropped significantly over the past 2 days, Abercrombie and Fitch, right? After their ridiculous rally, biggest drop on Abercrombie and Fitch in a significant amount of time. The past 3 days, right? Down pretty much 15% after not even being close to that. NVIDIA, largely the same. Their biggest red day, guys, even since before earnings. You'd have to go back a very long time to find a big red day on NVIDIA like this. And even Costco, another one of our plays that had ran exponentially since the past 4 months, now it, after some very solid earnings, which we covered on the channel yesterday, getting crushed 7.64% to the downside. Three things about these stocks, guys, right? Well, Abercrombie & Fitch and Costco have two of them. Costco, brutal loss of this 12 EMA hasn't really happened since November. Abercrombie & Fitch, brutal loss of the 12 EMA has not happened since, well, I mean, this significantly since a very long time, since pretty much 2023, summer of last year. And NVIDIA, although NVIDIA had come up a significant amount, still far away from its 12 EMA, so not doing that as well. But the drops on all three are significant. And the three things they have in common are they are your exponential runners that we've been having over the past few months, right? So it has to be notable to us when all three of those stocks in completely different industries now have all had their worst day of trading in the last 4 months since the rally started. So are institutional investors potentially taking money off the table in everything that's ran a lot and potentially waiting on the sidelines for more bargains? Well, that is what we're going to be looking at, guys. And it's also notable to me that while you had a sell-off in all three of those major names that had ran a lot, what actually was green here today, guys? Apple and Google. Well, funny, Apple and Google are two of the stocks that have sold off the most in the past month and a half. Take a look at Apple right there, right? Big sell-off. And Google as well, from top to pretty much the bottom of this week, was down about 15%. So those two stocks have already gotten crushed, and it seems as though now people are buying back into them. So can we potentially have some rotation from your overvalued names into other names which are now fairly valued? Very possible. These are the things we'll be taking a close eye on in the next coming days and weeks as we potentially look for some more consolidation on SPY and QQQ. SMH, right? Your semiconductors as a whole, also very brutal red day to the downside. Could just be some time after such an extended rally, guys, right? This could be your blow off top right here, just for some extended weekly consolidation. Very healthy consolidation on SMH, 164.59, just looking for a weekly higher low, potentially tag your 12 EMA. A little bit of a consolidation, guys, is never a bad thing. So if that does happen on semiconductors, we will look if the rotation is healthy. Is the money leaving semiconductors to go into other assets that are fairly valued or cheaply valued? Namely, they could be pouring in to continued momentum into financials, continued momentum into healthcare, and also potentially buying the dips on some of your big tech names that are still relatively cheap as opposed to the names that they're exiting, right? So we're going to keep a very close eye on the health of the rotation if the markets do now drop. So all that being said, let's get into the technicals, guys. The daily bulls are, yes, still in control, even after today's brutal sell-off. However, the hourly trend is potentially being favored to the bears right now. So if we get hourly downtrend continuation into Monday, it will be daily consolidation continuing at that point. And right, we are just going to be looking for them to protect 505.40. This low right here is absolutely crucial. Lose this into next week here, guys, and we will have a daily uptrend right away shifting into loss of the daily uptrend. That, guys, usually signals a topping out of the market. When the bulls try to put in higher highs and then just get rolled over right away, just goes to show you guys that the momentum is potentially diminishing to the upside for the markets. We may be due for some potential correction. That being said, your bulls are still in control. This level right here is crucial. If we lose this, guys, it's a loss of the daily uptrend. You'll be losing your 12 EMA. Then we'll be looking to this old faithful trend line to see if it can save us down there. That is what I'm going to be keeping a very close eye on for next week. Now moving on to QQQ. QQQ bulls still in full control, but QQQ also, guys, notice that ever since your mid-February, it's been very tough for the bulls to put in new higher highs. Other than a few instances in the past week of trading, guys, we've largely been stuck roughly at about 440, the market's inability to move higher, right? So the QQQ is potentially starting to roll over ever so slightly, right? And you can see that best when we take an opposite look at SQQQ. SQQQ is the inverse of your QQQs. Obviously, it has some leverage on it, 3 times leverage, but we're looking at this for the technicals. And can you see here, the drops are getting less and less and less and less significant, right? kind of rounding out the bottom could potentially be due for SQQQ push to the upside, which, right, is the counterparty to QQQ. So QQQ could be looking like it's rolling over to the downside. I can view it better when looking at SQQQ. When you look at SQQQ, it's a lot clearer because of the leverage, right? The magnification of the size of the drops really jumps out to you a lot more a lot more than it does just straight looking at QQQ. So that is another thing that was notable to me. That being said, right, your lows right here, 434.36-ish roughly, this low right here of Tuesday's trading is going to be absolutely crucial, because if we just put in a higher high today, only to flush to lower lows on Monday, guys, it's going to be a higher high into direct flush rollover, which is usually synonymous with the topping out of a market right here. So going to be keeping a very close eye. If we lose this into a daily downtrend potentially, we'll be then looking out at the bottom end of the trend line, which currently sits at about 432. If we were to lose that into next week, it will signify further weekly consolidation for your markets. The bulls still with a lot of space to work with, anything above 421, just going to be looking for a weekly higher low. But obviously, if we come in and break this to the downside, right, just going to be looking for, at that point, extended monthly consolidation for the month of March and maybe even early April, which should give us a very beautiful buy the dip opportunity for further trend continuation in 2024. So now moving on to financials. Financials not looking bad at all, 0.17% to the upside, still in a nice daily uptrend here, but very tight market, right? Could potentially be shaping up to be a little bit of a rising wedge. And if we get a rising wedge, if this ever breaks bearish, well, then you know, guys, that weekly consolidation will likely be underway at that point. The bulls are still in control, anything above 40.18, just looking for a daily higher low for further trend continuation, but we're quickly approaching our areas of all-time highs. This zone is the last area of the all-time highs, but if you were to take it, guys, from some further supports that we had roughly down here, right around 39.52, you can see that we're kind of already in this fairly wide resistance area, right? So just keep that in mind. I know the top end of the resistance is closer to 41 to 42, but we're already entering this whole zone, right, as a whole. So just keep that in mind in financials. If financials were to roll over here, it would just be a general rejection from this zone. And then we're just looking out for a weekly higher low, anything pretty much above 37, just looking for a very healthy weekly pullback for further trend continuation into 2024. Now moving on to healthcare. Healthcare not looking too bad, down 0.18% on the day, but still daily bulls are in control. We need to keep an eye out for this line right here, 144.64 to the downside. If we flush this into next week, it will pretty much be a loss of the daily uptrend. Your bears will be in short-term control, and we will be looking for weekly further consolidation. Further weekly consolidation on healthcare, guys. Previous all-time high area of resistance should be acting as current support, 142. It also coincides with your 12 EMA, this yellow line right here, and also coincides with our previous major area, right, of resistance, which should now be acting as support. You can see that better on the weekly time frame, right? So this whole lower area, 142, decent buying opportunity for healthcare. And maybe that may be the time where, if you guys like playing this sector, of course, may be worth a look for a biotech pullback, potentially breaking out here as we are above our most recent areas of resistance. So on the monthly, this is monthly breakout of your range, breakout, retest, maybe run, right? So keep an eye out that on for healthcare right here. Now moving on to IWM Russell. IWM Russell down 0.06% and still putting in a new high of the day. So they got as high as about $210, which is a very crazy move for IWM Russell, right? Daily bulls are still in absolute complete control right now. Daily uptrend, it's not very pretty, but it is a daily uptrend. I'll give them that. Now, any drop right now is just going to be for a higher low above 203. However, if the bears take back too much of this move and cut the lows, could be setting up for daily lower high into lower low conversion, which would just mean we're in for a little bit of weekly consolidation. Past 4 or 5 weeks have been very good to this play right here. But if we do have some weekly consolidation, guys, I am targeting 200 down to about 190, 195, right? This whole red box, which was your previous big area of resistance for about a year and a half, should be acting as some very nice support now that bulls are above it. I'm looking out for the breakout, retest of this range, and then run into late 2024. This is where I'm looking to buy into IWM. And I'm going to be using TNA, which is the 3x levered play for the Russell specifically. Now moving on to the Dow Jones. Dow Jones not looking too bad, but still closing below our area of resistance. You can see how big this area is for the Dow Jones, right? Tried to break above this resistance area for a very long time, 2-3 weeks, broke above it, but then daily downtrend was set instantly. This drop was largely due to Apple's performance, not going to lie, over the past 2 weeks. Now daily downtrend is set. Seems as though the bears setting the lower high on the day today, guys. You can see it best if I zoom in, right? So lower low, lower high, lower low, lower high. If we do get sent to lower low conversion next week by the bears, it's very notable to us, guys. Now, for the past 4 days, we've traded under the 12 EMA, right? Prior to that, we usually had quick and expeditious recoveries back above your 12 EMA. Now, two things working against us. The 12 EMA is being used as resistance right now, and this resistance level, which was support, is now back to being resistance. So two things playing against us. If we roll over and cut these lows, 38,460, that is a continuation of the daily downtrend. It will be heavier weekly consolidation at that point. And at that point, we're looking out 37,142 is your higher low, looking for very healthy weekly consolidation here. Could come down an extra couple percentage points into this 12 EMA. 38,119 is going to be the first line of defense on the weekly. So even the Dow Jones may be a little bit tired, guys, may be wanting to roll over with the rest of the market for some potential consolidation. So that battle between the bulls and the bears, the battle between your greedy bulls and your bears that have been waiting for this seasonality now that hasn't happened, didn't happen in February, hasn't happened so far early March. Could the next few weeks be the catalyst here for some eventual weekly consolidation? Very possible. We have CPI next Tuesday and then Jerome Powell the following Wednesday. So Jerome Powell in about a week and a half and CPI next week on Tuesday. Those two things should be very big events for the market. And if for whatever reason any of those two events is negative, well, the bears are definitely going to run with it, guys. Now let's move down to our major tech stocks, shall we? So big tech stocks, right? Apple just chilling here about 1% to the upside. They got as high. The Apple was really doing good today for a majority of the day, guys. They were up about, almost 3% on the day before reversing with that nasty move here that we got in the morning. Apple reversing into the close here pretty much. They even got through the nasty move on QQQ just fine and then reversed heavily into the last hour of trading, guys. Take a look at this sell-off, guys, right? 1.5%. Same thing pretty much as yesterday. Performed well in the morning, heavy sell-off into the close, and even dipping more into the after hours now. So the analysis on Apple is pretty much the same at this point, right? Your bears are in full control of this stock. We were looking for the daily bounce. We got the hourly trend change right in from yesterday into today. That's what we were looking for. Hourly trend change. We'll see. Can they maintain the hourly uptrend into Monday and Tuesday's trading? Your daily bounce now is underway. How high did we get so far with the daily bounce in relation to our most recent lower high? Very important. Not even 38.2%. So if your bears roll this hourly time frame over into further downtrend on the hourly, that will mean your daily bounce is finished and we will be looking for the potential retest of your lows and maybe even for lower lows. Last line of defense here, 166 for the stock. So crucial next couple of days for Apple. One thing's for sure, I will continue to play Apple stock as we dip down into the 160 level. Should still be maintained as decent support. And if for whatever reason, guys, we flush this area, the next target area is going to be 155 down to about 145. That is a very, very big one. Wouldn't want to see them lose this one though, guys, because it is sideways monthly consolidation right now. A loss of 166 would be potentially a monthly downtrend at that point. If March closes below here, it'll be monthly downtrend confirmed, and then we'll be looking to our lower support levels to kind of back us up. But still, even if that does happen, guys, very good value for Apple. Anything below 170 even is excessively good value. Now moving on to AMD. AMD was up on the day, pulling back heavily, just like NVIDIA did, right? So up on the morning and then down 9% top to bottom, only 2% on the day, but still 9% top to bottom is nothing to ignore, right? So now daily uptrend can be challenged. If we lose 199.39, we are going to lose the daily uptrend at that point. Opens the door, lower high, lower low conversion for the bears. And we are just going to be looking at that point. If we do lose the daily uptrend into daily downtrend, right? This beautiful daily uptrend into potentially daily downtrend, just looking for weekly consolidation, anything above 161 pretty much, just looking for a weekly higher low for further trend continuation. This level right here, 180, going to be absolutely crucial. Top end of this whole area of consolidation. So keep a very close eye, guys. 180. If we do start pulling back on the daily, this is your next big area of support. Just looking for a weekly higher low for maybe further trend continuation after we're done some consolidation in semiconductors. Now moving on to Amazon. Amazon still struggling with this infamous 177 level. You can see how many times this level has plagued the bulls in the past, and seems as though even 2-3 years later almost, we are still playing the same game with our good old 177. That being said, keep an eye, guys, on this low right here, 173.26. Amazon has been in a nice daily uptrend. However, the bears took back a lot of this most recent move. And now if we roll over and cut these lows, you will be in a daily downtrend. And at that point, it will be weekly consolidation. Keep an eye, 166.37 for your weekly higher low to act as some defense for the bulls. The 12 EMA on the weekly is also curling nicely up into this area. And you can see Amazon hasn't really lost this 12 EMA since November. So this is going to be your first line of defense. Second line, guys, is the gap fill after earnings, talking about 160. That is where I personally prefer to buy Amazon stock more. So bulls in control for now, but keep an eye for the daily downtrend rollover if it does manifest, going into the mid 160s all the way down to 160 itself. Now moving on to Google. Google also putting in a nice bounce on the day before getting pretty much erased with it when the rest of the market started dipping 11, 12, 1 p.m. So had a very nice rally up on Google in the morning, guys. From yesterday's close, talking about almost 2.5% to the upside before giving it, more than half of it back, only ending 0.78% to the upside, but still green. So Google, we were also similar to Apple, looking out for this daily downtrend, and we wanted to see the size of the bounce. So we had been commenting in the last couple of days that Google had finally done a great job at recapturing this hourly uptrend. So hourly uptrend still being maintained. If they maintain that through Monday, then your daily bounce simply continues. Now, how high have we gotten off this daily bounce? We did exactly what I wanted Google to do, guys. We came up about 80% of the move. This most recent down move was now taken back 80% to the upside by your bulls. It gives the bulls a good shot at having the space to set a daily higher low for the daily trend change. So that's what we're going to be looking out for here, guys, is can the bulls, as soon as we lose this hourly trend, right, can the bulls set a higher low and then higher high for your daily trend change? As of now, looking decent, but got rejected exactly where we were predicting yesterday's video, right? If Google came up, keep an eye, 140 to about 138. Big previous resistance was support. Now that we're under it is resistance once again. And look, as soon as we tapped into it, tapped this 12 EMA moving average as well, got rejected on the day instantly. So now it's all about protecting these lows, 131.55. If we roll over into Monday's trading, that is, we will be looking to protect these lows. Now moving on to Meta. Oh, excuse me, guys, had to get some coffee. So Meta down 1.22% to the downside, but doesn't really impact Meta that much, right? Meta is actually one of our names that's holding up the best, in my opinion. Still a very solid downtrend. We're going to be keeping an eye on the low of Tuesday's trading as well, talking about 489, 490. Keep a very close eye on that. If we were to lose that into next week, it will be a loss of the daily trend. We would also most likely be losing the 12 EMA. And keep an eye, Meta really has not lost the 12 EMA since pretty much the early days of January at this point. So if we do lose this, it will be notable. If we lose the 12 EMA, lose the higher low, and this area of resistance, which is now support, gonna look a bit like the Dow Jones, right? The lower high into lower low. At that point, Meta will just be in for a weekly consolidation. Anything above 455.50, just healthy weekly consolidation. And Meta, Meta has a decent amount of space for the weekly higher low, talking about 10%. So they do have a little bit of space, but we're going to be following this one day at a time. If Meta does get an extended little sell-off, quick, for a few weeks here, it'll do a great job of cooling down this weekly RSI. And personally, if it does come down here, guys, I'm going to be looking to play Meta $430 to about $420. Now moving on to Microsoft. Microsoft down 0.71%. So Microsoft as well, not holding up the best, right? One daily downtrend here, another daily downtrend here. Just goes to show, guys, that the stock is having trouble moving forward. The bulls keep getting rejected at these higher levels. May just be time for some extended weekly consolidation. Daily trends show the exact same thing, right? Daily lower low, lower high. If we cut these lows here, 398, 399 next week, daily downtrend is just reconfirmed. And at that point, guys, keep a close eye on those lows that I just mentioned, 398. If we lose this, it'll be weekly confirmed downtrend. Microsoft will be joining Apple and Google as two of your big tech names in major weekly downtrends. At that point, guys, it'll just be a month of consolidation for Microsoft, just looking for a monthly higher low. And you guys know me so far, I'm looking to play Microsoft as close as possible to 380, 375. If I can get some plays down there, that's what I'm looking out for on Microsoft specifically. So we'll see. Can the Bears convert this into potentially a weekly downtrend? And obviously, if they don't, guys, if we just have a nice V-shaped recovery back to the daily uptrend, well, your weekly higher lows are protected. And we're going to be looking at 52-week highs, 421 as resistance. But keep a very close eye, guys, on the market rollover. That's why I'm giving you more downside targets. Now moving on to Netflix, still struggling here, 0.61% to the downside. And Netflix as well, right? Nice daily uptrend. But now, if today's top was the high, we need to keep a very close eye, guys, on 593. If we lose 593, daily downtrend on Netflix, and then at that point, we're looking for weekly consolidation. Where can weekly consolidation end up, in my opinion? Well, the top end of this range that we just broke out of, right? These are your levels from 2020 and 2021. Big area of resistance should now be support for your bulls, and that would be an additional drop here, guys, on Netflix of roughly about another 5%. To the downside. So just keep a very close eye on that level for Netflix specifically. That is going to be the target. If for whatever which reason, guys, we flush beyond that, the bulls do have more space. 551 is your most recent weekly higher low. So looking for the bulls to start protecting this. The 12 EMA should be curling up into this level as well. So just keep a very close eye on that 575 level for Netflix. Now moving on to NVIDIA. So NVIDIA obviously getting crushed today here, 5.5% to the downside, but top to bottom on NVIDIA, guys, take a look at this drop, right? 10.5% to the downside, a little bit more than AMD. NVIDIA, though, we were saying this yesterday, NVIDIA at least has tons of space. Now, anything above 771, just looking for a daily higher low for further trend continuation. Can we potentially come back, tap this 12 EMA, tap this previous resistance as well down here at 832 and just continue? Yes. The problem arises, guys, is if the bears take back too much of this move, right? So you can see on the pullback right now, the bears have taken back already in one day 50%. If this gets down to 80%, if they come down to 815, let's say, well, that's kind of an engulfing move and it sets your bears up for lower high into maybe lower low, guys. At that point, we will be having a bit of weekly consolidation. Take a look at the weekly candle close on NVIDIA. Does not look that pretty, does it, right? So we may just be due now for some extended weekly consolidation. One thing's for sure, they have tons of space for it. Anything above 472, looking for that weekly higher low. And this area, this yellow line right here, is your previous earnings breakout zone. Resistance, broke it out, right? Moved above it. So I would be targeting, if we do get extended weekly consolidation, this should be a main target, guys, $740 for your first stop. Now moving on to Tesla. Tesla down about 1.85%. So Tesla, the analysis on Tesla has been pretty much perfect at this point, right? Loss of the daily uptrend. We were saying that your higher time frame bulls were looking to capitalize on this, which they did perfectly, right? Weekly downtrend, lower high, into lower low, full bear momentum to the downside. Bears controlling everything on Tesla, right? Monthly downtrend, weekly downtrend as well. Daily downtrend is now going to be back in motion. We couldn't even get more than a 2-day bounce on Tesla after these lows right here. So now the bears back in control of your hourly time frame. If this continues well into Monday, your daily downtrend simply continues at that point. And like I said, we're now in the support area, guys. 180 down to 170 is a big support. You do have a little bit more. If this is the big one, if we drop, we have one last one here, 153, and then you guys don't even want to know, it's all the way down to about $105. So looking for these temporary areas to hold up. It also coincides with the downwards portion of your downtrending channel line right here, lines up with roughly 170. Now, if Tesla drops into the 160s next week, I am still looking to play Tesla, but I'm going to be very conservative, guys, because my outlook for this stock for at least the next 3 to 6 months is just not that good. They're highly sensitive to interest rates, and in my opinion, before rates start coming down, and before we start getting some more bullish forecasts on EV demand from not only Tesla but other car manufacturers around the world, this is just not going to turn around. So I'm going to be very conservative with my Tesla plays, potentially even looking to play down in the 150s. Now moving on to Palantir. Palantir actually not with that bad of a day, 1.5% to the downside, but still trending relatively close to their previous highs, right? The one area of resistance that we're dealing with right now is pretty much your $27.50 all the way up to about $28. This whole upper end of this range that we're in right now. So that's what we're struggling with right now. And the bulls just not able to get it done. The rest of the market not favorable as well. But decent little uptrend here by Palantir. So any pullback, just looking for a daily higher low, anything above 23.44, looking for the daily higher low and for a potential trend continuation and try to make a second attempt at this higher level right here. But one thing's for sure, guys, if the rest of the market ends up red all next week, do not expect Palantir to do anything on its own. I understand they've been doing fantastic recently, but they are still part of a larger tech industry. And if your semiconductors and AI plays take a little bit of a breather, this one will follow the same fate. So keep a very close eye on this. If the bears take back too much of the move, could be setting up for daily lower high, lower low. At that point, we just be looking for weekly consolidation, and Palantir is very, very healthy. Anything above 22.42, just looking for a bit of a weekly higher low for further trend continuation. Palantir still not included in the S&P 500, so we'll have to see next quarter if they make the list of potential inclusions. Now moving on to PayPal. PayPal actually green today. Phenomenal, right? 0.87% to the upside. But guys, we are still trapped right now, okay? So we're still trapped between the $60 and $57 range. This is the big area of congestion I keep pointing out on the stock because of how crucial it is to protect. If we close a weekly candle below 57, it's not going to be looking good. That being said, we are still in a daily uptrend. They have set the higher low right here. We recaptured the hourly trend over the past few days. It's not pretty, but it is an hourly uptrend. However, if we roll this over into next week, let's say into Monday, that, guys, and we flush these lows right here, 57.88, going to be a new daily downtrend heading into your lows, and that would not be looking good for the weekly here, guys. The weekly is absolutely needs to protect this $57 level. If we were to lose this $57 level, it'll be weekly downtrend confirmed, and at that point, guys, we're heading pretty much 54 first stop, and then $50 is your second stop. PayPal still not able to break and close above this down trending channel line, which is what I'm looking for. So in my opinion, guys, if I'm looking to trade PayPal right here, I'm either waiting for a break, weekly downtrend with the market consolidation as a whole, picking up some shares cheaper between $54 and $50, or I'm looking for confirmation of a break, hold above my trend line right here, and then we are looking to go. This trade right in the middle here, very dangerous trade to be making, very, very speculative trade, right? Really don't have much to go off of. I either need cheaper or I need confirmation to the upside. So hopefully you guys enjoyed today's stock market recap here. Let's take a very quick look into my portfolio and see how we wrapped up the week. All right, guys, so taking a look at my portfolio, you can see our year-to-date performance now with the Friday close is about 8.73% to the upside for the year, which is very, very good considering the fact that due to our assignments that we got earlier in November and December, we were running some China-sensitive plays and interest rate-sensitive plays, which really took a lag in our portfolio in the early January season. But we've since been able to close those plays at profits as they came back, and after having written a bunch of covered calls on them, we were able to get out of those plays. And since then, guys, it's really been a very steady journey. 8.73%. We are outperforming both indexes on a year-to-date. SPY year-to-date 8.38% and QQQ year-to-date about 8.18%. We are sitting ever so slightly higher here at about 8.73%. And I do expect us to continue to outperform the indexes. Hasn't been the best start to the year as we started off highly negative, but I'm very confident in our ability to have a tremendous rest of the year here, guys. So with that being said, let's take a look at the portfolio. And one thing that I do want to start off, guys, it's a very good thing that I closed the Snowflake loss earlier in the week, right? So you remember, guys, we closed that one at roughly about $178. We closed it for about $1,100 loss after being assigned, well, not assigned, but we wrote the 187.50s for 2 weeks out after earnings, and the stock just got crushed. And now look at it today, right? 161. So we saved ourselves pretty much an extra $2,000 in losses, which is why I keep saying keep the losses small. And if you don't have high conviction in a company, guys, just take the loss, take the money, and move on. That's exactly what we did with the Snowflake position. That being said, let's get into the current place, guys. You can see we do have some Rivians. So in my last update, you know that probably I had the Rivian 11.5 calls leading into the Investor Day. And when the Investor Day started, I saw a decent opportunity to roll these contracts up 2 strikes, not to the 12s, but to the 12.5s, and it only cost me $25 a piece. Now, we were coming into this week with about $45 of premium for each one of those contracts that we wrote on Rivian, and as the price was pulling up during the Investor Day, guys, I think the price was roughly right about here, about 1178, 1180, which is where I took this roll at. And then the price significantly increased after that. So now our total average cost on Rivian is about $11.80. And we do have the 12.5 calls expiring next Friday. Did I get a little bit too greedy going for the 12.5s instead of the 12s? We will see. But what the move did is it cost me 25 cents to move up $1 in share price. So in reality, if it ends over $12.50 by next Friday, guys, I'll be making the difference of this dollar minus the cost of the roll, $75 per 100 shares. So that should be a decent profit, guys. $230, $235 on these 300 shares. I would be quite happy with that, especially after the substantial decline that we had here after being assigned on the position. And I really like their investor presentation. So I'm very happy about having this position and look forward to managing covered calls as best as I can over the next couple of weeks while the strike prices are closer to my cost basis. Now moving on to GDXJ. So this was a very beautiful trade, guys. We got called away on GDXJ. We had 200 shares of GDXJ that we got assigned a few weeks back. Our cost basis on the GDXJs, let me just double check, was about 31.67 if I want to say correctly. Yeah, 31.67. We sold 100 shares at 33 and we sold 100 shares at $34. After having written some decent premium, right, our cost was all the way down there. And you can see, guys, now we are going to be out of the position as a whole. So very decent trade, guys. I'll do the ROI numbers probably on Monday's video. Haven't done the ROI numbers, but it is a fairly decent trade as a whole, guys. Talking pretty much, on 100 shares, about 4.3%. And on the other 100 shares, about 7.43%. So what is the midpoint of that, guys? Roughly, 5.5%, let's call it midpoint. Only in about 3 weeks of trading. So that is very, very good, guys. Very happy with the result of this trade. Pretty much, well over my 1% per week rule. So very, very happy with that one. Just out of that one, regaining the buying power. And now we have a few trades that we did close today. So number one is what I'm going to tackle, guys, are going to be the Marvell puts that I wrote. So I took the play Marvell for earnings yesterday. They had earnings after the close. They did drop significantly today, but still not enough to assign me. So I wrote the 74s, right? The stock was trading right before earnings, 84. The expected move was about 10%. I went literally for the 74s, which is about 13% drop. And I also went for the 71s. 71s would have been a 16% drop for 1 day pretty much. And you can see how much I got for those, guys. Semiconductor play. So I was fairly bullish on the outlook of the industry as a whole, but the company did disappoint and I was able to still get out of these positions for a substantial profit, right? 95% plus profit. 74 puts written for $1. And then I wrote the 71 puts for about 49 cents. So both pretty much over my 0.5% rule. And you can see we were able to close these on the day today, 3 cents for one, 5 cents for the other. So virtually worthless in terms of that. Very happy with the way that position went as well. Now we get into the important ones. So actually, before that, let's tackle some Shopify here. So I wrote some Shopifys earlier on in the week. You can see that we wrote these Shopifys. They were featured in prior videos as well. We wrote them for about 23 cents. The 71 puts here a bit late in the week, but still decent ROI considering that I did only write them on Wednesday. So the remainder of the week, 23 cents. And we did close them today for 90% profit here. Pretty much automatic take profit at, 9:30 in the morning. So happy to have closed that Shopify put as well. And we did have SoFi. We had these SoFis March 15th for next Friday that we wrote earlier on the week. We wrote these $7 puts after the stock got crushed because of their new bond offering, right? So you can see that trade right about, where are they? The SoFi 7 puts got 26 cents for them. So about 3.5%, guys, for 1 week of trading. And I did close them today pretty much at about 90% profit, almost. Let's call it about 80% profit. As a matter of fact, actually, since the cents are so small, we closed it for about 6 cents. So very, very nice trade. We were able to realize most of that profit in only 2 days of trading. So this goes back to the concept of trying to pull premium forward. I went 1 week further because I knew that any bounce would quickly pull all of the value out of those contracts, and that's exactly what happened. Now let's get into some fun stuff, guys, namely the Apples and the Googles here, right? So Apple, you guys know that I took a call earlier on in the week. You can see that we got filled on that call. It was pretty much a 45-day call, and I was looking for a little bit of a bounce. We bought it the other day for $5.09, and when Apple had a bounce going today, when the rest of the market was falling off a cliff, I was able to close this for about $7.27. So we made roughly, let's call it about $220, which is exactly what I wanted to do, guys. It was 40% in 2 days. I'll take that every single time, guys. We were literally just looking to play oversold conditions into a little bit of a bounce. And I did make that play happen today while it was bouncing. When the rest of the market was selling off, this is when I took profit on my position. I closed it when Apple was about 172.80-ish. It did run into the 173s, so missed a little bit of a profit there, but big sell-off intraday. It just didn't make any sense, guys, that Apple and Google, were trading up on the day when most of the rest of technology was down. And if for ever which reason, guys, QQQ just has a dump next Monday and Tuesday into next week, let's say for CPI or something like that, I just don't want to take the chance. I'd rather just secure profits, protect the account value, potentially leading into some weekly consolidation that we've been anticipating, right? So just being very, very cautious, took the profits and pretty much closed the trade on that call. Now, the 172.5. So you guys know that I wrote the 172.5s earlier on in the week for Apple. They're pretty much right here. So the 172.5s for $1.17, right? Well, at the same time, when Apple was having its nice little rise on the day here today in the mid 172, it was about 172.80-ish. What did I do? Not willing to take a chance. Would I mind being assigned on Apple here at 172.50? Not really, guys. To be honest with you, it's very easy to write covered calls for next week. But if the rest of the market falls off, guys, I may be able to get Apple at the 170 strike, at the 167 strike maybe for next week. So that's why I closed the position at a significant win as well. So you saw, guys, I wrote those down here for about $1.17. Now, I did close the position for a profit as well for 21 cents. So that was pretty much about 80% profit there as well. I just took the profits, was not willing to let this one ride into the end of the day with how red the rest of the indexes were, right? So I just wanted to take my profits, have that buying power ready for next week. Maybe I can get an Apple short put even lower. So that's why I closed that trade. I did the exact same thing on Google here as well. So Google, we had the 137s. And the way this week was going, guys, I was sure that I was getting assigned these shares, right? We wrote these pretty much last Friday, anticipating that the 137 level could hold. On Monday, just went straight down, right? We wrote the 131s. Close those as well yesterday too. So actually, as a matter of fact, I may as well show you those as well. So when Google dipped, I double dipped on Google myself. I wrote the 131s while having the 137s active. We got about 0.5% for those, right? 70 cents. And we closed them later in the week here for about 5 cents. So over 90% profit. I was maintaining my 137s though. And as the stock recovered here, today, I was still expecting to be assigned. As yesterday we closed 135.41. I thought maybe today, okay, we might go into the 136s, but I'll probably be assigned at 137. Well, Google actually came nicely above in the morning, but then started selling off aggressively. So when I saw that potentially we were about to forfeit the 137 after being above it, what I chose to do on Google as well, and I missed this one, guys. I was actually on my way to the gym while this sell-off happened, and then I looked and it was below pretty much 137, about 137.60, 136.65, sorry. I was on my way to the gym. As soon as I got there and checked my phone, I saw that they were below, and I was like, you know what? Do I want to take assignment at 137 on Google, even though it's relatively close? Or can I potentially look to get a little bit better, a little bit greedier next week, maybe the 134s, 133s, 132s, if we get a broader market sell-off? Same logic as Apple. I just took my profits. So Google, I wrote them. You can't see them down here, guys, unfortunately, but I wrote them for about $1.09 each. And we did close them today, still for a profit, but 49 cents. Now, I could have closed them on the morning for 5 cents, guys. That is one mistake that I made on this play. This, when we were at the highs, they were pretty much worthless. At that point, guys, I was thinking, you know what? When the rest of the market was good, I was like, you know what, guys? Probably I'm going to end up just, it's going to end above 137, so I won't have to do anything. And then I got a nasty surprise after taking a shower, going to the gym, wasn't checking my phone, checked my phone into the midday pretty much, and was like, whoa, we gave it all back. So I may as well protect the profits that I do have and live to write another week. So that's exactly what we did on Google. Like I said, would not mind being assigned at 137, but if I have a chance of closing a trade at a profit and resetting a few $100s lower, I'm going to do that every single time, guys. So that's the logic behind the Googles. Everything else, guys, is relatively the same. You can see we still have our play on 20-year bonds here. The calls are still active, nicely in profit by about $200. We did open 2 shares of Mercado Libre, as I was saying earlier on in the video. Mercado Libre, very attractive opportunity. I will add a few more shares for a swing trade. Very nice post-earnings sell-off. This is exactly what I was looking for, right? Monthly breakout retest of this range. If we continue dipping into this area, guys, I will continue to add more nice little swing trade position here, probably for the next, 6, 8, 12 weeks at this point. Will I like to keep this position active, right? Then we also have our other active swing trades, SPGI, MCO. Logic on those is still the same. Still expect some further upside recovery on those. We have a new swing trade for Zscaler. So all of these swing trades, guys, you'll see that they're the same. They're all pretty much breakout retest trades, right? So you see this previous area right here on Zscaler, roughly the 190. I jumped the gun a little bit on the day today just because I saw this beautiful curl starting to happen. 4-hour MACD starting to cross over, right? 4-hour oversold conditions. It was prior hourly oversold conditions, and we're kind of looking to round the corner, right? So I'm giving the bulls a chance to set the hourly trend into next week potentially. If not, guys, well, my stop loss on this trade specifically is going to be this red line right here, which is going to be below the 200-day moving average, roughly about $183. Upside targets for Zscaler at this point, I want to ride it back at least to about $240. So this trade could take a few weeks to play out, but was a fairly decent trade nonetheless. MRK, same logic as well, same little swing trade. I'm going to be taking more and more of these share swing trades to show you guys, even if you have a small account with a few $1,000s, you can make these plays as well. Merck, same logic as well. 4-hour oversold conditions. It's a very strong company nonetheless. We were looking for the bulls potentially put in some recovery. If that doesn't manifest in the next 2 days of trading, guys, I will most likely be closing the position. I'm looking for these to reverse quickly when we hit oversold conditions on their 4-hour time frame. I'm looking for these to have their bounce quickly, as they are, slight breakout or retest trades. So I am looking for these to trade, for them to turn around quickly. If they don't, I will close them at small profits, just like I closed ACAM the other day. ACAM, this was exactly the same trade. I waited until it popped to $110. It kind of puttered around here for a little bit, and I said, you know what? That's not the style of recovery I'm looking for. So I just closed the trade right here, and you can see it's kind of still puttering around $110. So I'm looking for these to move quick to the upside, and if they don't, I just take my little profits when I can. Very, very decent so far, guys. And for the rest, well, the rest I got logged out, but the rest was pretty much the same. Apologies for that, guys. 15 minutes pretty much. But the rest was pretty much just the same as well. ETH and Bitcoin didn't touch. Nike not high enough for covered calls. And BABA also not high enough for covered calls. BABA, we did close a nice contract on BABA this week, though. We had the $70 puts here. The 70, I didn't write it on the screen, unfortunately, guys, but we had pretty much the $70 or $71 calls for about 50 cents. We closed those for a profit as well. So my break even on BABA should now be down about 77.25. This one not high enough for covered calls either. So that's pretty much the recap for the week, guys. Hope you enjoyed the video. Hope you guys also had a very nice week of trading too. Just please be careful when we have a lot of signals firing off. I know the bulls are still in control of everything, guys. We're just trying to look out for a potential worst case scenario, which would line up with seasonality, the fact that we're still in very, very greedy territory, and the fact that stocks like NVIDIA, Costco, and ANF all having a hard time passing these most recent highs just goes to show you guys the momentum of the greed is potentially coming to an end could resume in April, but maybe March, just a little bit of a breather, guys, for all of your high-flying names, which could drag down the indexes as your confidence just starts diminishing ever so slightly, right? So just keep an eye on that, guys. Love you all as usual. If you liked the video, guys, please consider dropping if you enjoyed the video, please consider dropping a like. Really would appreciate it. And also consider subscribing to the channel if you're new. Do these videos every single Monday to Friday, pretty much after the close. We cover earnings as well. And we do Sunday night videos, top 5 options plays for the upcoming week. So keep an eye out for those videos, guys. And as always, if you have any questions or you would like me to bring something up on the channel specifically, please leave it down below in the comments. And you guys know I always answer you as soon as possible. So take care, guys. Enjoy the weekend. I'll see you on Sunday night. Peace.